Good morning, viewers. It's Wednesday morning, April 9, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. President Trump has a spine of steel and he will not break, and America will not break under his leadership. The White House has reaffirmed President Trump's tough stance on trade, saying America will remain unshaken as global negotiations ramp up following new tariff measures. Tuesday's enthusiasm started when Treasury Secretary Scott Bessent said the Trump administration was open to negotiating to reduce tariffs, saying the US could end up with some good deals. The administration also signaled it was open to discussing lower tariffs with Japan, Israel, and some other countries. Japanese stocks jumped after Bessent said the country would be prioritized in trade talks. President Trump said he spoke with South Korea's president and that the administration was in discussion with many nations. The ecstatic tone didn't last the morning, though. U.S. Trade Representative Jamieson Greer said Trump won't provide exemptions to his new global tariffs for individual products or companies. Nearly 70 countries have reached out looking to begin negotiations to reduce the impact of U.S. trade policies. Meanwhile, Trump said he will slap that extra 50% tariff on China if Beijing didn't drop plans to retaliate against extra levies US announced last week. The White House said on Tuesday afternoon that the additional tariff on China is going to into effect on April 9. This was after China had said earlier it will never accept the blackmail nature of the US to Trump's threat to ratchet up tariffs on Chinese imports to more than 100%. Beijing lashed back at Trump's threat of even higher tariffs on China, raising the specter of an all out trade war between the world's two biggest economies. If the US insists on its own way, China will fight to the end, the country's commerce ministry said. In a sign Beijing is digging in for a protracted battle, the government threw its weight behind the stock market and devalued the yuan against the dollar, pulling a reference rate below a key threshold for the first time since the fall of 2023. And United States Trade Representative Jamieson Greer said earlier that exemptions to the global tariffs are not expected in the near term. And that's when US stocks began to decline from their highs at mid morning. Wild swings lashed Wall Street for a fourth straight session as back and forth trade threats between the US and China knocked down stocks, raising an earlier rally that was the biggest since 2022. Hopes for a quick end to the extreme volatility were dashed after a White House official said the US is moving forward with tariffs on China as high as 104%. US stocks ended Tuesday in a downswing, capping a volatile session that began with hopes of newfound clarity on the president's tariff policy. Dow Jones Industrial Average rose 1,461 points earlier on, reflecting investors' faith that the administration may deliver on the talks of potential trade deals. They closed down 0.84% or 320 points to 37,645 and at a 52-week low. The S&P 500 fell 1.6% or 79 points to end at 4,983, leaving it on the brink of a bear market. The S&P 500 had a historic day. Tuesday's swing marked the first time since at least 1978 that the benchmark hit an intraday high, up more than 4%, only to close down more than 1%. The Nasdaq Composite dropped 335 points or 2.15% to 15,268 after it had rallied more than 4% earlier. The tech-heavy Nasdaq blew its biggest intraday gain since at least 1982. The S&P 500 closed down below 5,000 for the first time in almost a year, following Tuesday's volatile session and a strong morning rally as investors' hopes faded for any imminent U.S. delays or concessions on tariffs ahead of a midnight deadline. After falling as low as 36.48 points earlier in the day, the CBOE volatility index, seen as Wall Street's fear gauge, went back up above 54 late in the session. It had risen on Monday to its highest level since August last year. Stocks extended their pullback from earlier highs Tuesday afternoon with a fresh sell-off in the tech favorites that led the market advance the past 2 years. Apple fell 5%. In individual stocks, health insurer United Health Group and Humana jumped after the US announced a 5.06% increase in payment rates to private insurers for 2026 Medicare Advantage health plans. As Trump's trade war sent markets into a tailspin, Bank of America Corporation clients posted the fourth biggest inflow into US equities on record last week, $8 billion. Institutional clients, retail traders, and hedge funds were all net buyers. Quarterly earnings season will kick off later this week. JP Morgan, Morgan Stanley, and Wells Fargo set to report on Friday. Treasury yields continued higher. Long-term Treasury yields soared after a lackluster U.S. sale of notes highlighted cracks in the haven status of government debt. 10-year yields rose to about 4.26% after settling Monday at 4.164% after their sharpest one-day rise in a year. But San Francisco Federal Reserve Bank President Mary Daly said on Tuesday afternoon that with the economy strong and a lot still unclear on the effect of new policies of the Trump administration, the central bank should not rush to adjust interest rates. In Tuesday's other trading, in currencies, the dollar spot index fell 0.2%. In cryptocurrencies, Bitcoin fell 2.8% to $76,752. And in commodities, West Texas Intermediate crude fell 3.5% to $58.56 a barrel. And spot gold was little changed. Key events this week: Federal Reserve minutes. That's today. US CPI jobless claims, and that's on Thursday. And US PPI, University of Michigan consumer sentiments, and major banks reporting earnings, including JP Morgan, Chase, Bank of New York Mellon, Morgan Stanley, Wells Fargo on Friday. My take: the volatility reflects the new situation in which no one knows what the rules are or even what the desired destination is. Until investors reset expectations or those rules and goals are better understood, markets will continue these wild swings between hope and fear. People want to be optimistic and realize earnings are going to start to be reported in the next few days. Even if earnings in the first quarter aren't that bad, we are going to see a lot of language from companies about the expected impact from the tariffs. And I don't think we have seen the bottom. This whole tariff issue is still in its early innings, and it's going to take some time to play out. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I'll see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it's all about money.